When Bitcoin made a brand new all-time high, I told you that we would still find our way back below $100,000. Well, it's here. Bitcoin is now sitting right around 99K. In today's video, we'll be going over the recent Bitcoin price action, and I'll be taking you through what I think is the next likely case scenario. If you enjoy the content, make sure to smash that like button and subscribe. Let's jump right into the video. First of all, there's no denying that this is a huge breakdown for Bitcoin. As we can see, we were holding the 100K level as support multiple times, and the question was, were we going to go ahead and hold this level, or were we going to break through? Now, we know that typically with these support and resistance ranges, it's usually the third or fourth time where we end up breaking through. As you can see, 1, 2, and this was the third one where we went ahead and broke through. In yesterday's video, we talked about the fact that it was highly likely Bitcoin would be going down at the bare minimum $100,000. I believe when we were recording that video, it was right around 103 to 102.5K. So it was still a several $1,000 move. Now the question is, can we pop back up? Because right now on the daily time frame, this is not looking nice. And a lot of analysts are talking about a potential double top for Bitcoin. Now, I do have something to show you which could potentially negate this. But if we zoom out a little bit further, let's take a look at the weekly chart, because what we can see here is that this is very much a clear breakdown, as we just discussed on the daily chart. However, we are still inside a very important fair value gap. A lot of the times that Bitcoin touches these kinds of fair value gaps, we do get some pretty significant pumps afterwards. As we can see here, when Bitcoin made the high right around $109,000, this was around the beginning of the year, inauguration day, we came back down into this very important fair value gap on the weekly time frame, and we actually popped right back up and set a brand new all-time high. So we know that these fair value gaps do have a lot of value in the market. It happened again over here. We pumped through it, came back down for a retest with this wick, and then we went ahead and moved higher. So what is my base case? As I'm recording this video, Bitcoin is sitting below $99,000, and everyone is currently freaking out, especially with what's happening in terms of the war escalations. This weekend, we had the US strike Iran with some missiles. Now, of course, this is not positive, but if you do pay attention to the markets, we know that war typically is bullish for stocks and crypto because it does suggest potential money printing. Now, I'm not calling for that right away, but what I am saying is that perhaps this is blown way out of proportion once more. When we had, for example, the tariff talk, we know that Bitcoin dumped all the way down to around $74,500. Granted, it's a little bit different than a war, but same geopolitical tensions. And right now, Bitcoin is definitely reacting to this. So my base case here is actually that we could see a little bit of a bounce before we move lower. You'll remember my first prediction. I said that Bitcoin was going to go below $100,000. We got that. As we're recording this video, Bitcoin is below 99K. However, I still think that we could be getting a little bit of a pump. You might not believe me because this is a disgusting red weekly candle, which would suggest that we will be going lower. And I do agree with this. I think that Bitcoin will be going lower to establish its summer range. No issues there. However, in the short term, I still think that there is a little bit of upside here. Now, it doesn't mean that we're going to go all the way up to an all-time high. I actually don't think this is the case. But I do think that we could be talking about potentially retracing half of this candle before going ahead and moving lower. I mean, we see this time and time again on a weekly time frame. Bitcoin prints a very ugly red candle, and the next weekly candle makes it all the way to the top of the body of that previous candle. So keep your eyes on this. The reason I want you to pay attention to this is simply because the liquidation maps are concerning, especially if you're shorting this market. Now, if you entered from higher up, congratulations, because you're likely in significant profits. You may have even entered after yesterday's video, shorting from around $103,000 to where we are now. However, I would be considering taking profits. Of course, this is not financial advice, but just looking at the Bitcoin exchange liquidation map, what does this tell you? I'll refresh it to get the most accurate data on the 30-day time frame. Holy smokes. On the left here, if Bitcoin were to go down to $88,000, there would be under $2 billion worth of cumulative long liquidation leverage. On the right side here, though, what do you see? If Bitcoin were to go up to 117K, we have $16 billion worth of cumulative short liquidation leverage. And why is this important? It means that we have over 8 times more shorts in the market than longs. So pay attention, because I don't think that Bitcoin will come crumbling down before it potentially goes ahead and moves higher. That is currently my base case. Now, the summer chop is well and underway, as I discussed in yesterday's video. However, because of how aggressive people have been with shorts, I wouldn't be surprised if, for example, tomorrow we open and we get a little bit of a pump here. You might not believe me, but let's see how it plays out, because I don't think that these shorts are safe and sound. There is a lot of liquidity going all the way up, even to $103,000. I mean, we were just there. And as I discussed, if we go ahead and retrace even half of this weekly candle, it will bring us all the way up to $103,000. If we make our way to the top of the weekly candle, as we've seen several times before, that could bring Bitcoin all the way to just below $106,000. Let's see how it plays out. But right now, with all of the shorts piling into the market, I am actually leaning a little bit long here. And if you're part of my free Telegram community, you know that I'm in a trade that reflects that. By the way, if you want to join and know how I'm navigating this market, what trades I'm taking, we have the first link in my description down below. Make sure to click that and join my group, where you can also access my free signals group. Also, if you want to trade this market, we have Bluffin and Weeks, the second and third link down below. The second one, you can earn up to $1,000 in bonuses, or up to also $2,500 in bonuses based on your trading volume. And with Weeks here, the third link down below, you do get VIP 2 with 25% off all of your trading fees if you sign up with my link and my link alone, and of course up to $30,000 in trading bonuses. Now, if we take a look at Ethereum, we talked about this yesterday. We broke below this weekly range, and if we got the confirmation on the daily time frame, it would be looking very, very bad for ETH, potentially allowing us to enter a very nice short. Now, I didn't personally enter this, but I know that a lot of my community members, based on my analysis, sent me a message saying, hey man, thanks for that, because we entered an Ethereum short and we made a ton of money doing so. The question is, how will ETH cope with all this? Because at the end of the day, it's all about Bitcoin. Bitcoin dominance continues to increase, and we are now going to have the highest weekly close for Bitcoin dominance in the past, 4 years? Yeah, that's right. So Bitcoin dominance continues to increase. I hate to repeat myself on this topic, but as we can see, the prediction of 66% Bitcoin dominance is well and truly underway, and it will likely play out, only for us to go ahead and continue moving higher. It's still my base case for the summer as we begin a very choppy one. Now, what happened in terms of the war? Let me just go over this very quickly. I won't get into too many specifics, but the major news from Iran was that their parliament officially approved closing the Strait of Hormuz for the first time since 1972. If approved by Iran's top security body, shipments of over 20 million barrels of oil per day would be impacted. Of course, this impacts a lot of different countries. Now, the other thing to consider here is that the US is calling on China to stop Iran from closing the Strait of Hormuz. So we can see that these tensions are continuing to escalate. But let's see, maybe we get an agreement and all of this is over sooner than we think, and Bitcoin goes ahead and liquidates some of those shorts. Now, the last thing that I want to show you in this quick video is indeed the USDT dominance chart. Now, I want to bring this up again because we can see that we're getting a little bit of a pump here, which is of course not positive for Bitcoin and the rest of the crypto market. Whenever this pumps, we do see Bitcoin continuing to go lower, as well as altcoins too. So what you want to consider is, will we continue to pump up here? As you can see my red arrow, if this continues, then of course Bitcoin just easily heads lower. However, if we start trickling down here and try to hold this trend line as support, then perhaps this would allow us to have another red week or even month for this USDT dominance. So let's see how it plays out, because every single time that we touch this trend line, it does coincide with the tops and bottoms. Right here, we had the bottom, which was around the 74K top for Bitcoin. Then during the summer of last year, we had the 49K bottom. Then we came back down. USDT dominance held the support line, which has been holding for several years since 2017. And that coincided with around the inauguration top. Once again, we went to the upside here, and then we had that 74.5K bottom. And right now we are trying to establish the next level for USDT dominance, which of course impacts the rest of the crypto market. So keep your eyes on this chart, because if this comes a little bit lower, then this would allow the opportunity to liquidate a lot of those aggressive shorts that are now in the market. And that sums up today's extremely quick video. So Bitcoin did drop below 100K, as we were talking about on the channel. But right now, I'm not quite convinced that we are about to head much lower before we see a little bit of upside. The reason being, so much liquidity to the upside. Now, that doesn't mean that Bitcoin can't trickle on lower first, but what it does mean is that at this current fair value gap on the weekly time frame, there's a high probability that we get some kind of bounce. If you enjoy the content, make sure to smash that like button and subscribe, and I'll see you in tomorrow's video.